Trump just killed the $600 IRS rule. What it means for CashApp, Venmo, and PayPal users. Hey everyone, welcome back. I'm Ina Volovic, a tax expert. Today I want to talk about a huge change that affects millions of people using payment apps like CashApp, Venmo, and PayPal. The IRS rule requiring these platforms to report transactions over $600 officially has been repealed. Let's dig in what this rule was, why it used so much backlash, and what this means for you moving forward. What was the $600 IRS reporting rule? Back in 2021, the American Rescue Plan Act included provisions that required third-party payment processors like CashApp, Venmo, and PayPal to report the IRS any users who received $600 or more in payments in calendar year. That means if you received $600 in total payments for goods or services through these platforms, they would send you the IRS Form 1099-K reporting those transactions. The IRS said this meant to close the gap, the difference between taxes owed and taxes paid, especially from gig economy workers and small businesses. Why was this rule controversial? The main problem was the incredibly low threshold. Previously, the threshold was higher, $20,000 in payments and 200 transactions before the reporting kicked in. Lowering it to 600 meant millions more people would get tax forms, including many who use these apps for casual or personal transactions. But small businesses and freelancers argued this would create tons of unnecessary paperwork and confusion. Privacy advocates also raised concerns about the government getting access to detailed transactional data. Many lawmakers on both sides of the aisle voiced very strong opposition. How did the repeal happen? Due to the backlash, President Trump signed legislation repealing this $600 reporting rule before it went into full effect. This means that CashApp, Venmo, PayPal, and similar platforms are no longer required to report transactions over $600 to the IRS. Effectively, the IRS goes back to the old reporting thresholds for now. What does this mean to you? If you use these apps for personal or small business transactions, this repeal means you'll likely won't receive a 1099-K form for transactions under the previous thresholds. Less paperwork and less quantity triggered by the small payments. More privacy for your payment activity. However, and this is important, you are still legally required to report all income on your tax return, regardless of whether you received a 1099 form or not. So, what should you do? First, keep accurate records for all your income and expenses. Don't rely solely on 1099 forms for payment platforms. If you run a business or freelance, track every payment you receive and consult a tax professional to make sure you report everything correctly. Stay informed about any future tax law changes. These rules can evolve. And final thoughts. This repeal was a win for many small businesses and every user who felt the rule was too burdensome and invasive. But it doesn't mean tax compliance is optional. Honesty and good record keeping remains key. If you want help navigating these tax laws and making sure you're paying only what you owe, no more, no less, I'm here to help. If this video helped clear things up, please like, subscribe, and share. If you got questions or want me to cover more updates, drop a comment below, and thank you for watching. I'll see you in the next video.